long can your family keep up with rent, school fees, and daily living expense if something happens to you today? Welcome back to Insurance Capsule, where we break down insurance into simple, everyday language. And if you are seeing this channel for the first time, you're welcome. Kindly subscribe, like, and comment. In the next few episodes, we'll be talking about life insurance. Today, let's talk about term assurance, a type of life insurance. Term assurance is one of the simplest forms of life insurance. It provides financial protection for a specific period of time. For example, 5 years, 10 years, or even 15 years. But how does it work? You take a term assurance policy and agree to pay a premium, either monthly or quarterly or biannually or annually. It all depends on your capacity and ability to pay. In return, the insurance company provides a cover for that fixed period. If the insured person, that is the person paying the premium, passes away within that period, the insurance company pays the sum assured to the named beneficiary in the policy. Now, let's make it real. Imagine a young professional who lives in Lagos that has 2 children in school and is also responsible for rent, feeding, and general household expenses. And then this young person takes 15-year term assurance policy. If he dies within those 15 years, the insurance company pays a lump sum to the named beneficiary in the policy. The named beneficiary most of the time is always the immediate family member. That money can help to do the following. It can pay school fees, it can cover rent, it can maintain the family's standard of living for a period of time. But here is the key point. If the person is still alive at the end of the policy period, the policy ends and no money is paid out. So, term assurance is pure financial protection. It is designed to protect your family during the years when they depend on you the most. And because it focuses on only protection, it is usually more affordable compared to other types of life policies. Another important thing to note is this. If you stop paying your premium, your cover will stop. In simple terms, term assurance is about making sure that if life takes an unexpected turn, your loved ones are not left financially exposed. Because planning is not only about today, it is also about protecting tomorrow. This is Insurance Capsule. Do not forget to subscribe and click on the notification bell so you will be the first to be notified when a new episode drops. See you on the next episode.